and welcome to this very special edition of The Money Show. I am with you, Kavita Thapliyal, and today we are going to talk about gold, the entire trajectory of 2023 and in 2024. What can you expect from your investment in gold? To elaborate more on this, I have with me Mr. G Chandrashekhar. Hello and welcome to The Money Show and our special edition. And it looks like it's going to be a fantastic year for gold, looking at the Fed officials' intention of having at least or a probability of 75 basis rate cut in next 2024 in the calendar year. But before I get into the nitty-gritties of how possible does it look like, I want to understand the entire trajectory or a recap, a small recap of 2023 and gold's entire journey in this year.
Gold has had, as you know, a kind of seesaw year in 2023. There were several factors that supported gold. Gold also faced a lot of headwinds, but notwithstanding all that, now we are towards the end of the year. Gold is up close to 10% as compared with from the beginning of the year. October was very crucial for gold. When prices actually started to jump after the geopolitical development relating to Israel, the Gaza conflict, etc., etc. But as we moved into the third quarter and now towards the end of the year, things are becoming increasingly clear that the rate hike cycle has certainly come to an end in the United States. That is for certain. And then, of course, 2024, the rate cuts would start. But again, we'll talk about how and when it's likely to happen. I have my views. But 2023 also saw a huge amount of central bank buying, a huge amount of safe haven buying of gold. But at the same time, gold faced headwinds like rising U.S. bond yields, strengthening dollar, etc. Therefore, it's been a yo-yo year for gold, which is 2023. But remember, all of us, most of the time I talk about Indian investors, they all are good at investing in a rising market. While there is money to be made in a rising market, I have always believed there is a lot more money that can be made in a falling market. Therefore, people should know, when they have adequate product knowledge and market knowledge to play a bear market or a falling market, they can actually mint a lot more money as an investor than in a rising market. So, but that needs enormous courage, enormous conviction about the market movement, etc. Therefore, people, yes, people have made money this year on a rising market. But I want to continue to educate people about how to take advantage of even falling prices. So I think 2023, good year overall for investors. Those who took good bets on gold, they've certainly got good returns. And now, of course, we have to look ahead towards 2024.
So that's a very right point that you highlighted. You want investors to make the most of the prices right now. So considering that 2024 so far looks like a great year for gold, time to put in money and just stay put, at least if you have a year's time horizon?
Oh, yes, certainly. I think from here on, my sense is there is no great looking back for gold. Okay. Number one, but don't expect, I will not subscribe to certain outlandish forecasts that gold will go to $2,300, $2,500. Please, I want to caution viewers, please do not get carried away by all this outlandish forecast. But I'll give you my considered view. One, the Fed has spoken very clearly. There will be no more rate hike, which is very clear. But I also think the Fed will be in no hurry to start cutting rates. The market is actually currently pricing in the first rate cut by March 2024. My very strong sense is it's premature. In my view, second quarter appears more likely, maybe May, maybe June, in my view, appears more likely because one, the US economy is still quite resilient. The US labor market is still robust. Wage growth driven inflation is still elevated. And therefore, inflation hasn't fallen. It's weakening, falling, but it's nowhere close to the target of 2%. Therefore, I believe the headline inflation in the US has to fall further. And the lagged effect, monetary policy always exerts a lagged effect on the economy, and the lagged effect of the rate hikes over 2023 will start to manifest themselves from early 24, and therefore my strong sense is that the Fed, as I said, has spoken. Rate hike cycle is over. Rate cut cycle has to begin. But in my view, that will begin from second quarter and not the first quarter. That will have certain implication. For example, the dollar will start to weaken, and we are seeing that already. A signal. The bond yields will start to weaken. That also we are seeing. But I want to again make one point. Look at the positioning in gold, market positioning gold. I find that positioning is near an extreme point where speculators usually unwind overly bullish bets. Mark, every word is important. They will unwind overly bullish bets, and therefore that can also have an impact. Once the speculators start to unwind their overly bullish bets, I think that will probably place a cap on the upside potential for gold. But once the rate cut signals become clear, because the timing is what is important, and therefore once the timing of rate cut becomes clear, which in my view could be in the second quarter, then gold will start to move up decisively. At the moment, gold is moving up and down based on whether it's getting headwind or tailwind. But I think that there'll be a decisive move up once there is a strong signal that manifests for the first rate cut, which again, as I said, in my view, at the risk of repetition, I'm saying at second quarter, that is going to support gold. But there are additional factors. Gold will face more tailwind, supportive factors. I'm looking at strong central bank buying, okay, and I'm looking at pressure from falling yields.
So when you say buying from central bank, do you see demand coming up from China also? Because so far the kind of trend in terms of demand for various commodities from China has weakened. So you think there's going to be a trend over there specifically for gold?
Yes, I would think China, when you look at their gold reserves to their GDP, I think it's still, there is an opportunity for them to raise their gold reserve. Therefore, there will be central bank buying. But remember, China is also a very large producer of gold. Therefore, there is guarantee that the People's Bank of China will buy from the international market. They will buy domestic production. After all, they need to create reserves, and then therefore, while Central Bank of the PBOC will buy, People's Bank of China will buy gold. There's no guarantee that they'll buy from the international market. They will source it from the domestic production. That's a possibility. And then therefore, when we look at all these, and the dollar is all said and done, it has to weaken. There is just no choice at all. But another factor is ETF flows. We found ETF outflows in the whole of 2023. There has been a net outflow from ETF in major ETFs that we track. But retail investment actually recorded an outflow in 23. But I am seeing in 2024, if private investments were to return to gold, and I'm sure there'll be some return of private investment into gold, that will give additional acceleration to the upside risk in gold prices. Therefore, I think these are factors which I would think investors have to bear in mind. But at the same time, US economy is resilient. It always gives you upside surprises. And all
Exactly. So a lot actually still to a large extent, as per your explanation, is data dependent. And clearly, the inflation, the headline inflation is still very high as compared to the comfortable zone. But let's also talk about silver. We know silver follows gold, silver follows base metals also. Double whammy, again, a trajectory towards super speed. Is that going to be the pace for silver in 2024?
Yes, 2020, silver is not only a precious metal, but also an industrial metal. And its industrial demand will depend on the economic activity from a manufacturing and industrial perspective. But there are signals, for example, China is slowing down, as all of us know. The European economy is not in a great shape. US is set for a slowdown going into 2024. And then therefore, notwithstanding the fact that the silver market is in a state of deficit, silver demand may not pick up as rapidly, it will not grow as rapidly that it would normally grow, okay, in 2024 because of the overall slowdown. Therefore, but yet, silver prices will rise. There is no doubt at all. Probably they will, from around $23, they could go to $24 for sure, in my opinion. And possibly, if the slowdown is not a severe slowdown, but it's a mild slowdown, then I think it can even potentially go to $25.
All right. So now, as far as diversifying your portfolio is concerned, according to you, it's time to buy gold, and you should be invested for a longer term horizon, because that is what we also see when it comes to your financial planning. But any better way? I mean, let's just talk about the sovereign gold bond also, and the first tranche that we saw reap good amount of profits for the investors who had invested in 2015 now. Looking at this, sovereign gold bond still appears to be one of the best investment instruments as far as gold is concerned.
Yes, of course. At that point of time, yes. At that point of time,
At that point of time, that's a very important point you mentioned. Yeah. Okay.
is important, but I must confess, and
Yeah.
I want to confess in public, I went completely wrong in not supporting sovereign gold bond in 2015, because at that point, you must remember the kind of euphoria that this country faced with a new government. Okay. And there were talk that our economy will blossom, our rupee, which was at 63, will become 40, etc. All that. Even I got carried away with all that euphoric condition. And then, but we know what happened in the last 10 years to our economy. Therefore, I'm not saying we are doing too badly, but yet all those statements haven't come true really. The point I'm making is, at that point of time, and when you compare it with today, sovereign gold bond were great. What will happen from now on to sovereign gold bond? I think a part of the gold investment should also be allocated by physical, by put in ETF, put in sovereign gold bond, put whatever, all that digital gold. I think there has to be a combination of all this. Yeah.
That will be all. Thank you so much, Chandrasekhar sir, for being on the show and helping our viewers with gold strategy in the new year.